Welcome to the Leo Hefner Show. 1,068 ways to get screwed in real estate. It's the hard lessons that we have to learn that really need to be passed on. So the goal of this show is really not to hear about all of the wins and success people have had in real estate investing, but it's to be able to talk about where they stub their toe, where people learn the hard lessons, where you're just like, oh my God, I did not see that coming. That sucks. The things that opens those doors to the right people to ask if you're dealing with utilities, or, I got a good one that just happened recently that we'll talk a little bit about today, but, it was dealing with AT&T and Cox in the city of National City down here in San Diego. So, it wasn't an expensive lesson. It was, a couple grand, but still yet, it was one of those things that when it happens, all you can do is just be like, damn it, make notes and move along for it. So the purpose of this show is to actually get some of those insights from people who have been in the industry and doing what we do. I mean, it's real estate. It's whether you're flipping real estate, you're buy and hold, you're new construction. Everybody's got those hard lessons, and sometimes you just kind of have to eat that crap sandwich and share it, because that's what people need. I mean, that's what I like to hear about. All the wins are fantastic, but give me the hard stuff. All right, I'm going to bring on my co-host Eddie Borio from Eddie Borio.
Hello.
Eddie is with blockbuyer.com, one of our show sponsors. They're the only SEC-approved platform for non-accredited investors to be able to invest with the pros alongside everyone else in real estate. Eddie, how are you today?
I'm doing great on site at a location, and I'm always excited to be able to discuss the ways that we've been taken advantage of in real estate, or things didn't go well. And there's hundreds and hundreds of success stories. But for those success stories to apply to other people, it's a very specific scenario. Whereas opposite to that, there's exact precise scenarios on how to get taken advantage of and how they can apply to our crowd. And that's what we do, is try to mitigate the risk and make it a smooth investment for crowd investors.
Fantastic. I went out to Arizona. I think I've already mentioned this, so I got to be careful not to talk about it every time we start the show. But I went to Arizona with you in I think it was January of 20 for your official launch for BlockBuyer. So, it was exciting stuff. And I know you got a lot more really good stuff coming. So we're going to have to figure out how to dribble those tidbits out to our listeners so that, they can take full advantage and not give them the whole meal at one time. Keep them coming back,
Yeah, and our goal for the platform is there's 1,068 ways to get screwed in real estate, and we identified all of them in a very detailed list over the past 15 years of investing, and we designed all those ways and reverse engineered those ways to protect crowd investors. And so we built those into our system, into our software, into our procedures and processes and legal compliance and user experience. So with the goal of mitigating risk, reducing issues, and optimizing investments. And that's
right.
what BlockBuyer.
I call that a risk reduction roadmap. That's what I use in my business for South Bend 7 as a way to mitigate every possible scenario I came up with to try and have our investors lose money. And it's always good. And that's why you and I clicked, is we're both super conservative, love real estate, and really try and look at the other side to try and mitigate as much risk as possible.
Yeah, that's the goal. There's so many ways to invest in real estate, and the people that come to you with the deal in hand or with the offer or the legal, they didn't take time to be able to identify all the things that could mitigate risk. And so that takes a lot of time, effort, cost, and bandwidth, and they won't do that for you. And therefore, that's what we've committed in my entire life to do for crowd investors.
Yeah, that's great. That's why we created this show. We want to hear about the spots where the concrete jumped up, stubbed your toe, you got a bloody nose in the process, broken arm, took a roll out of it, and then came up the other side that much smarter about it. That's what we want. So one of the other sponsors that I've been working on has been Trojan. Don't be a fool, wrap your tool. How not to get screwed in real estate. Actually got a response for them the other day. Did I tell you?
No, you did
They
not.
said they're not. Yeah, they responded to me. They said they're not doing any JVs and sponsorships at this time. So
Yeah.
I figure I'll do this a few times. I'll send them a little, I'll send them a snippet and see if I can get them to change their mind. So I want to bring on our next guest. This is Dan. Dan, bringing him to the show right now. There's Dan.
Hey guys, how we doing?
Good. How are you?
Fabulous. Greetings from Austin, Texas.
Hi, Dan.
Hey.
So I want to read your quick little bio on you, Dan.
Sure.
Dan is an active real estate advisor, investor, and partner. Dan has raised millions of dollars across multiple channels, including accredited investors, family offices, those unicorns most people can't seem to find, and investment advisors, while empowering his partners to raise seven figures on multiple occasions. He specializes in niche segments such as industrial, self-storage, complemented with a deep knowledge of tax advantage investing. And I'll let you brag about where you went to school and all of that. But welcome to the show, and thank you for coming on. I really appreciate it.
Awesome, guys. Great to be with you all this afternoon.
Yeah, thanks for joining us.
So Dan, we met on a family office conference a week or two ago, and he's been around the block and he's got some really good stories. But you know what? I kind of stopped him when he started talking about some of the good ones. So Dan, as I was telling you, that what we really want on this show is we want the oh shits, like that just didn't just happen. Oh my God, the one that keeps you up at night trying to figure out how you just fix that, or you just can't believe that it happened, because those are the pitfalls that most people don't like to talk about. But those are the lessons that are the most valuable. I mean, you can have people tell you what to do all day long, but until you get kicked in the teeth is when you learn. Like, oh man, they told me to do this, this, and this, but they didn't tell me to look out for the bus. Damn it.
Yeah.
So,
and Dan, and most of the time when you have successful home runs in an investment, it's a very prescribed formula. It's ideal team. It's ideal financing, ideal solutions. The deal was evaluated. You mitigated risk. All these perfect scenarios come together, and most investments are only about a 25% move forward. So out of that 25% of the home runs, most people don't have that perfect storm of scenario, but they do have all the issues that come up. The other 75% of deals that don't work out, that's where people stumble on. And so our goal and objective is to kind of identify different ways of getting taken advantage of, to be able to reverse engineer those. We add them to our platform, and at the same time, we learn from our guests and be able to then provide that value to our crowd investors.
That sounds great. And, probably two main things I want to share. Of course, one is from personal experience. The other one is something that I've kind of seen and advised on, or say advised against. First is just, how do folks get into this? Real estate investing. Crowdfunding may make it a little bit easier, and you hope that each platform does the diligence, but a lot of time it's still boots on the ground. It's through a friend. It's through, a CPA that you think is very conservative, and by default, they probably did their diligence. Anyways, I'll take you back a few years, and things have been boiling hot here in Austin for the past decade. Everything you touch is gold until it doesn't. So we were pregnant with our son, 5+ years ago, and there's for those that know Austin, the northwest part of town, it is a nicer part. It's a wealthier part. I had the chance to be an LP investor to get in, to participate otherwise in the deal. And I did boots on the ground. I walked, I'm like, I'm not a sticks and bricks guy, but this place looks like you can smell the glue. It's almost done. Okay. Favorable terms, 90-day sort of periods. This is me coming as a hard money lender for folks on the call. But just in case, I kind of put on my lawyer hat. I grew up in the Northeast, spent some time at GE Capital, so it's easy to be litigious at times. And, I thought I really covered everything. So fast forward 90 days, the loan doesn't happen. I'm still boots on the ground. Our son was born, so I'm in your 2 hours a night sleep, your baby bliss, as they say. And I said, well, this is another 90 days. It's only April. Of course, pre-COVID, you had your natural cycles when folks would buy a house. This was still reasonably
What year
priced.
was that? What year?
This would have been 2016.
Okay.
So everything was still extremely called normal. This was a great house. It had the mother-in-law suite. So either, especially, this community would have truly, if the in-law did come in, I know this was a very common layout for some of the folks, first generation from some of the Southeast Asian countries. It just seemed like such a layup. Fast forward another 90 days, my priorities and interests were elsewhere. And guess what? The glue was still there. And there was probably, a few more proverbial holes in the ground and such, which, means that we're probably going on a big, ugly calendar cycle. And, from that time, what I learned, growing up in the Northeast, the whole Catholic school upbringing is, okay, what's right, what's just? And my thought is, okay, well, this is probably going to be chronological order, and probably anything that you had in a contract and somebody signed, you're ultimately going to get paid. Long and short, particularly in Texas, when you put in, how much you put in, none of that matters. The second there's a breach of any contract, you get in line. Now, I would say for our bankers out there that have the heavy, first lien mortgage, you're covered. But for the rest of us, so this could play out in a potential crowd scenario also. You may feel that you're second lien, you're second in line, or frankly, first in line. If your paperwork doesn't hit in time with the county or the respective government organization, you're SOL. You're at the back of the line, and
in back of the mechanics liens as well, right?
Oh, absolutely, yeah. I mean, all the vendors that go through there, anybody else, yeah. And I joke. Let's say Leo came in on the 89th day and lent $1, but gave all these terms that said, "Hey, if you break these, I have $100K in fees." By Texas law, Leo would be in front of us, and it'd be a nightmare. So,
wow.
Let's just say from that standpoint, once you're out of the game, and frankly, somebody on the other side may not. Their reputation is not worth as much in the near term. And I don't say that in a rude way, because I know folks, there's different stages of life and such, but you got to lawyer up. So, I lawyered up. What's really interesting too, at this time, you may not even know where you are in line. So let's say the three of us here were, it's like, hey, am I going to be nice to Leo, or am I actually not going to talk to him? So there could be some gamesmanship. That said, I did best efforts. There's probably about 4 or 5 other folks in my shoes and just said, hey guys, how can we salvage this? So, anything that we had on the side or interest due, it's like, okay, what's the biggest ROI return of? So, can you get your principal back? And it was, not fun to say the least. I ultimately got back 70 cents on the dollar. It could have been a lot worse. I'd say I had a very fair kind of old time Austin lawyer. That's at some of the other prices I was quoted out. I mean, this just could have crushed to the point where I didn't want to get involved. But it was, the timing of it too sucked. I mean, it was during Thanksgiving time. It was the last Thanksgiving my father was alive. I didn't know that at the time. And, I'm up in Chile, Pennsylvania, trying to figure out, okay, how does this real world sort of work? So, takeaways, first, hard money, like anything. I mean, the due diligence on stuff, let me take a little step back. I would say, and I'll use indexing terms. So for folks that aren't familiar with indexing, 0, 0, 100, and that can mean $100, it can mean 100 million. But from 0 to 100, I'd say from an indexing standpoint, even if, I've known of you guys in your 20-year track record, my first chip with you is going to be 10% of my max. So let's just use round numbers, $10,000 here. Thereafter, after we do stuff, I might easily go to 25 or 100. But with that, as I said, I was in baby bliss. I was much higher than 10%. The only time I played at the big poker hand when I didn't. So that's almost like a red flag in hindsight. The second thing is, once you cross that first breach date, you have to file something, even if it's with your best friend. And if you are doing the hard money loan or the equivalent thereof to your friend, obviously have it in contract. What I've done also going forward is realizing a lot of these LLCs by default, it's set up for limited liability, but I always bring it back to the person's side consulting. And that's kind of a broader term, but I feel everybody has a side consultancy. And then I try to get it back to, although it might be tough to get a PG, especially with some contractors and some folks, to get, I'll even have somebody's social security in a sealed envelope, which sounds a little rough, but frankly, to move stuff on the legal side, that's a pretty key number. Particularly, there may be ways to find it, but you want them to give it to you as kind of this third step.
Right.
And what's the PG?
Personal guarantee, but for some folks,
of course,
it's not going to matter. Or if they're hitting bankruptcy, I think it's more as like, hey, the fact that I have your SOC, it's verified. I'm not going to do anything. But if we cross this line, I'm going to do everything by legal means possible. So,
So Dan, can I jump in for just a moment, so
Sure.
I can keep people following? So this is particularly a pitfall that you have found specifically in Texas.
Well, part of with the ordering, if once not even stuff hits the fan, just a little bit hits the fan, you have to be the first to say, hey, this contract was breached, and you have to file it accordingly. And I'll be honest with you, I forget the exact term or who I went to. Obviously, I learned that really quick, but This is across the country. I would say there's different rules for different states. Also, what's considered a deed versus a mortgage. For folks that are heavily involved in the sticks and bricks side, there's very unique things in calendar, like how the 20th day may mean 20 or may mean 21. It may mean 119. It's really there's a lot of intricacies if you really want to get involved into this. So obviously know your geography.
So I know a lot of private lenders that are of the mindset that, hey, if I own the first mortgage, I don't really care what goes on behind me, because I'm first in line. I get it. So, you can have mechanics liens going down behind you, second, third, fourth, fifth mortgages, lawsuits. But if you're in first position of the mortgage, you're pretty much untouchable unless it's property taxes.
Yeah, fair point. But you like anything in, politics aside, if the mob is angered, you really don't know what's going to happen. And that's the thing. I do think if somebody's as a contractor in a desperate situation, to get the house done or get the sale done at all costs, there's going to be some feathers that are rubbed the wrong way. And, once again, when folks do get to that desperate thing where it's kind of like an addict when you need that 10K a week just to get the folks on site to finish, the holes in the walls, they say, you just don't know what's going to happen. And you know what I mean? It's, So ultimately, as the first lender, do you need somebody on site? Maybe for a big commercial project. For residential, it's probably not going to make sense. You just got to hope for the best. But yeah, you're right. Generally, first you are covered, but as I said, it's could be a little Wild West. And I think we've seen the appetite for stuff across the country, what people view as what's right by their definition of what's right. Even being a first lien, I don't know if I'd want to be in that position.
Right.
So So Dan, there's a really big epiphany here that you stated in your story here. We have identified it as number out of 1,068 ways to get screwed. Number 577 in our list is what we call putting a put in a contract. So just like in stocks, you have puts and calls. Put is you're betting the stock is going to go down. A call is you're betting the stock is going up, and you're using leverage in a contract. So in a stock, well, in this case, a put in a contract means, in a way, you're either betting that the project will fail, or you're insulating yourself with a significant amount of insurance that when a contract is breached or something fails, then you actually have a payday. So your analogy was, if you get put $1 in, let's say that I'm, lending on something on a project, and I'm going to say my fee is going to be $1 in interest for lending you this $100,000. But if for some reason there's a breach or failure, then I'm going to get $100,000 in fees plus my original $100,000. Now, if you know that statistically most projects can fail. So in a way, people look to be able to incorporate these to mitigate risk and to be able to profit. Now, in the VC world, VCs do this to entrepreneurs. They know there's no way in hell the entrepreneur is going to meet this project timeline, meet this profitable, have this many users added on, and ship out this many products. So they put a number in there. That number is to put a huge burden on the entrepreneurs, knowing that if they don't meet that, guess what? the VC can get double the amount of stock. So that's actually putting a put into the contract, knowing that the entrepreneur or company will not actually reach that goal. And that's exactly what was done in this case, for an example.
And that brings up a good point.
Yeah.
Read your frickin' contracts before you sign them.
Well, so that's an interesting point. So in this case, even if you're an investor into a project, you're not going to have the visibility on Dan's contract with, that put clause in the contract. You're not going to have that visibility. So in a way, you could be having the best presented investment available, not knowing that Dan's going to jump the line, get $100,000, and you're actually pushed way to the back of the line, even beyond the mechanics liens. And so that happened to me in Arizona years back. By the way, Dan, it was that property by, I think it was called Beehive Highway by the lakes.
No, this was different. I mean, this was still well within Austin city limits. It actually backed up to a golf course. So that's why I was like, this is a good one.
In 2015, I went out there, and I think it was Beehive Highway or Lane, and we were looking at real estate out there at that time, and I couldn't believe, the amount of people that were moving to Austin. There was such an influx that exceeded what the housing was able to provide, and the property values started skyrocketing.
Yeah, we're still, on top of that, we're still that way in Austin now. And what I would even caution, I mean, I've heard even houses in the burbs, maybe a tear down or an older house listed for 300 going for 380 cash. So, like anything, kind of caution when you are putting down, cash going forward in busy markets.
So
we've got 7 minutes left in this show.
So let's zoom out, and Dan, so in what ways could you have mitigated risk in this deal that now that you have hindsight, what would you have done differently?
Yeah, I mean, first, I probably would not have gone in not being, knowing that I'm not first or co-first lien. Secondly, if I did, I would have gone through, crowdfunding platform where, basically it's kind of a CYA. So I have a very strong, me and many others and their legal team, et cetera, coming in as a second. Third, once, the sniff that something was going to go bad, lawyer up, at 12:01 a.m., get that document out there. And, at that point, there's probably the only three things I really could have done. I mean, the check's already written. And a final thing too, I'd say I would, I would not play a lawyer, try to draw up my contract. I mean, that's the thing, I guess, just if the sponsor does not have, even if it's a simple one pager for you and you're the one kind of drawing it up, that should be a pretty big red flag. So that's a great question. Thanks.
I agree with that. All of my contracts, mortgages, deeds of trust, I always have the attorney in the state where I'm doing business write it up, since there's so many little differences, from state to state. Yeah, best way to go. So Dan, one last thing is you had actually something, a little gift for our listeners. We got about, 3-4 minutes, but this is a tee up for you to talk a little bit about Rocket Dollar and self-directed IRAs. Sure.
So, it's Valentine's Day. I'm from Philadelphia, the city of brotherly love. So here's my little Ben Franklin to everybody. One thing we didn't talk about today, but I'd say, on a positive note, you should be aware, and your investors should be aware, that we as Americans can use our retirement dollars, aka our old 401k, old IRA, or if you're self-employed, a solo 401k, to invest in real estate. Most folks are not aware of this, but this is at least a double-digit trillion with the T market.
Yes, it is.
Some estimates from 10 to 30 or 40 trillion. Only about 100 billion of this is in use. So, at the very least, become aware of it. If it makes sense to sign up, I said this is my little February special. As I said, if you can spell it, you can get it. Dan Kryzanowski. Check out rocketdollar.com. We've seen, well over 100 million move into real estate just on this, with Rocket Dollar being the conduit for you to have checkbook control of your retirement dollars to invest in what you want, when you want, which includes owning properties outright or crowdfunding platforms.
And you can be accredited or non-accredited.
Correct. Accredited, non-accredited. It can come from your traditional money, your Roth money. And once again, for our realtor friends out there that are self-employed, you can actually contribute over $50,000 a year into a solo 401k. It is very, very, very powerful.
And with interest rates below a fraction of 1% in the bank, I mean, it seems like a very good solution.
Yeah, it really is. I mean, whether you're tax deferring or you're already, have a post-tax account, it just makes sense for me. You're right. I mean, that's part of what I got into it. I was looking at my Fidelity target date funds in cash and said, whoa, I can go into my buddy Flip's houses. I have a self-storage fund, even something boring like industrial. And then you're getting these double-digit returns across the board.
Mm-hmm.
So can you use an HSA account with Rocket Dollar?
At the moment, no. There's other custodians that have it out there. Now, that said, you could use your HSA to invest in private assets such as real estate.
Right.
That said, I'm not aware if there's a checkbook control provider. I know some of the custodial legacy players in the space will offer that.
Okay. Yeah, good stuff. I know a couple of people that have paid for kids' braces, flipping houses through their HSA account.
I love it.
Great way to build it up. Only $7,200 a year, but if you can start flipping a house or two, you can quadruple that thing, and the IRS is okay with it.
Yes, they are.
So a really good point here is that Dan has gone through the trenches and has made mistakes in real estate. That's one of the things that you actually want to look for in people who you do business with, is that they've made mistakes and learned from them. People who are always successful typically have a perfect scenario team, perfect scenario circumstances, and you probably won't be matching that. So therefore, Dan is a good example of someone who you would want to work with.
Absolutely. Everybody can get lucky for a while, but it's that time where you trip and fall. That's where most of your lessons are going to come through, as well as all your gray hair.
Yeah, got a bunch. If you have hair. If you have hair. Yes.
Well, great. Thank you for introducing Rocket Dollar to us, Dan, and thank you for joining on this podcast. And you offered a really great example of how things don't sometimes go well, and that's kind of what our crowd investors and investors should know about is that most deals don't, and so you have to actually look at them and mitigate risk up front.
Yeah, perfect. You guys, I want to thank you very much for being on. Dan, it's always a pleasure. It's great reaching out. Thank you for coming on the show. And I know you got a hard stop in about a minute, so I'm going to go ahead and let you go. Thank you very much.
Awesome, guys. Such a pleasure. Talk to you soon.
Thank you very much,
bye-bye.
Dan. Okay, bye.
Eddie, we're still live. So,
all right.
Dude, that was good. I was not expecting something to come through on the private lending side. So, that was, I came up through private lending, and so now to hear his take on what happened in Texas, I actually know quite a few people out there. I'm interested to ping some of them and bring some of them on the show to see if they've run into similar scenarios, or if that was, just one of those really hard lessons that Dan happened to run into.
Yeah, it's probably going to be happening more and more because it's something common that people overlook.
It is. So, all right. Well, that's a wrap. All of you guys that are watching this, and if you enjoyed it, please like the show, subscribe on YouTube, and I think it's up on Periscope too. Haven't figured that one out yet, but it's streaming live. So till next time, we're going to try this again for next week for another Leo Hefner Live with Eddie Borio and 1,068 ways to get screwed in real estate.
All right.
And again, our sponsors are South Bend 7, a debt-free private real estate equity fund backed by debt-free real estate, cash flowing real estate. Also, blockbuyer.com, the only SEC-approved platform for non-accredited investors to invest with others in real estate, crowdfunding investments for everyone, and hopefully soon, by Trojan. Don't be a fool and wrap your tool.
And don't get
Eddie,
screwed.
I'll talk to you later.
All right. Thank you. Bye-bye.
All right. Bye-bye. Thank you guys for watching the show. We'll see you next week.